Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is August 13th. We are going to take a look at one out of the energy sector, Occidental Petroleum Corporation. Oxy is what we're going to take a look at. This is a Warren Buffett stock here. I know he's been buying it pretty heavy over the last 2 to 3 years. It is not in my portfolio. Let's see what he sees in it. Before we get too far into the video, if you could do me a favor and hit that thumbs up button down below if you find any value in this content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Make sure the notification bell is clicked so that you are notified whenever we put out any new content. We do the stock pick of the day series videos Monday through Thursday whenever the market open, and we take a look at a stock that's pulled back on the day to see if it's presenting any value and might find its way onto my watch list. Really appreciate all the subscribers out there. The channel continues to grow because of people like you, over 1,000 subscribers. So all of you out there who have not done so, help me get to 5,000 subscribers and beyond. And make sure you hit that subscribe button. It only takes a second. It does help with the YouTube algorithm. It doesn't cost you a thing. And I really do appreciate everyone who's taking the time to do that. This is the Vested Interest stock screener. This is how we're going to run through the video. We're going to run through this criteria here, see if it meets 5 of 8. If it was a bank or a financial company, we would add in price to book, and then it would need to meet 6 of 9, but Oxy is not one. Now, this screener is one that I use on a high level to take a look at companies, thousands of companies out there in the stock market. It is a way to gauge whether or not I want to do more of a deep dive into the company's financials. So just because it meets 5 of 8 or 6 of 9, if it was a bank or a financial company, does not mean I am investing. It just means I'm interested in investing, makes it onto my watch list, and then I do more of a deep dive into the financials and the balance sheet income statements to see what's going on under the hood of the company. Now, you can check this company out at their homepage, www.oxy.com. That's www.oxy.com. That is their homepage where I pull this information from. What we do, Oxy produces energy and essential products to sustain and improve life on our planet. Our experienced teams located in the United States, Middle East, and Africa are committed to safe and efficient operations and products and to reducing our carbon footprint and helping others do the same. We are busy developing the big ideas and broad solutions we will need to achieve net zero. Every day we get closer, and we won't stop until we get there. So I wanted to note that they do have operations around the world, United States, Middle East, and Africa. They are an oil and gas. They operate out of 3 streams, basically oil and gas, chemicals, and midstream suppliers, so pipelines. They also did recently cut their dividend back in 2020, so keep that in mind as we start to look at some of the other metrics as well. So it's an oil and gas play primarily. Like I said, some chemical applications, something like a Lyondell-Basel, so into the oil products space as well. And then, like I said, supplying through their midstream service, so they have some pipelines also. Now, we are talking about Occidental Petroleum Corporation, ticker OXY, out of the energy sector. Now, the reason we're looking them down 2.58% on the day, closed out the day at $57.46. 52-week range as low as $55.04, as high as $71.19. They are right up against their 52-week low here. Market cap of $52.645 billion. A beta. Now, this one is a very volatile stock. Beta of 1.63, beta being volatility of the market, 1 being the market, anything under 1 being less volatile, anything over 1 obviously being more volatile. So this one at 1.6 is a very volatile stock, but you can use that volatility to your advantage. Buying on the low points and then holding as it rebounds would be a stock like how you play a stock like this. Price to earnings PE ratio, $14.89 per share. I like stocks under the 18 range, 15 even better. Obviously, the lower the better. The less we can pay for a company's earnings, the better, and that's what you're doing. That's the price per earnings. So you're paying $14.89 for every $1 of the company's earnings. If you didn't know what price to earnings, the PE ratio is. EPS, earnings per share, is $3.86 per share. Earnings, and that's what you're receiving, right? Earnings per share. So that's your earnings per share, $3.86 if you buy the company. That's what that means. Earnings date, November 5th through November 11th. So they will be having an earnings call there sometime in that little range there. Forward dividend is 88 cents. Their dividend yield is 1.49%. So they do have a low starting dividend yield. And again, keep in mind they did cut their dividend back in 2020, so about 4 years ago now. Ex-dividend date September 10th. So if you would buy them now, you would be in line for the next dividend, which pays out on October 15th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $72 per share. So they see some upside there as far as price appreciation, and maybe that's what Warren Buffett sees. Like I said, this is one that's in his portfolio. So maybe that's what he's looking at, some significant upside, and this one's significantly undervalued. I think if you went to his 13F, you could also find out what he paid for it. And I think we might be pretty close, if not under what he was paying for it. I'll have to look that up. Now let's jump over to the right. We're going to take a look at dividend yield theory. To do that, we take a look at their 5-year dividend yield average of 4.25%. We compare it to the current 1.49, or over here where it says forward annual dividend, 1.49, same number. And since it is lower, that speaks to overvaluation on this one. Now again, this one is going to be a little skewed because they recently cut their dividend. So we don't have 5 years with the recent dividend cut counted in. So some of this will include 3 years out of the 5-year will include whenever it still had a higher dividend. So that might be a little skewed, but according to dividend yield theory, it is potentially overvalued, right? But that's just one metric, one of many you should be looking at. Now the payout ratio is very low, only 20.73% payout ratio. So I like under 75%, so they're good there, which is probably why they dropped their, I don't know if their payout ratio was getting out of hand, but to drop down that significantly, maybe it was. We're going to jump down to the bottom here, free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, it means their dividend will grow as well. It also means they can pay down debt, and the company financially should be in good shape. 2020 here, you see 901 million in free cash flow. 2021 up to 7.6 billion. 2022 up to 12.4 billion. Very good for that 3-year stretch. Now 2023 is where they're starting to see a little bit of a drop back down to 6 billion. You can see here this line as well. They are repurchasing shares, right? 12 million 2020, 8 million in 2021. Huge repurchase. They had a really good year here in 2022. Big jump up in the repurchase of shares up to 3 billion, and then same thing in 2023 up to 3.4 billion, but that does not account for the drop in free cash flow. That's a much bigger drop in free cash flow than is accounted for the increase in repurchase of capital shares. So it would not get consistently growing free cash flow, even though 2023 numbers are higher than 2022. You had a big jump up and then a drop down, and it is 2023 would be better than 2021 if you include the repurchase of shares. So it is growing, but you just had a big jump up and a drop down there. So now we're going to jump over to stockanalysis.com. This is another source that I go to for information. Now you go ahead and pick any sources that you like, but I like to recommend more than one source so you can make sure the information you are getting is accurate and up to date. Don't, just blindly trust one source is always giving you the right information. Always back check your information so you can make sure you can get is accurate. Now they have 13 analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a hold and a buy. And if you were to go to stockanalysis.com, you'd be able to click on each one of these little pieces of this half pie here. This would be a strong hold, or I'm sorry, strong sell, hold, buy, strong buy. So it is right there on the edge of a buy, but there's probably some calling it a hold and maybe even some calling it a sell out of these 13. Just more than not are leaning towards this buy. And again, it is in Warren Buffett's portfolio. He is smarter than me, I would say. Now, return on equity and return on invested capital is another metric I like to look at. This is going to tell us how efficiently the company is reinvesting its capital back into itself, and you find that under the statistics tab right there. I like 10% or better. Return on equity sitting at 14.43%. Beats the metric I'm looking for there. Return on invested capital at 6.49. It does not. Now, I've talked about maybe splitting these up, but for right now, I have them tied at the hip, so they both have to be over 10%, so it does not get a check there for me. And EPS growth is another one that I looked at, or I like to look at, and I like 5% or better projected over the next 5 years. They are not projecting out, and if they are, it probably is negative, which is why they don't have it listed here, with revenue growth forecasted not applicable either, which is what NA stands for, so I don't have anything to go on there. Even though this is not a metric, I do like to see growing revenue. Let's jump over and look at the dividend history as we wrap this one up. It is a quarterly payout ratio. Again, they're saying 21.68%. I think Yahoo Finance had it at 20%. Either way, very low, under the 75% I look for, with very fast dividend growth, 25.37%, but only 2 years of growth. Like I said, they did reduce their dividend back in 2020. I think it was in the 70-cent range, and they reduced it significantly down under 10 cents. Now, again, they have started, clawing back some of this dividend growth or dividend that they dropped over time, but it is not back to where it was in 2020. But that's very fast dividend growth there at 25.37%. They're saying 2 years. I think it's actually 3 or 4 years. Buyback yield of 2.82%. That means they are efficiently buying back shares, and shareholder yield of 4.34%, which is nice. Going back to 2022 here, you can see they were paying 13 cents per share, raised it up March 2023 to 18 cents, raised it up March 2024 to 22 cents, and I would say if they are going to continue that growth, would be very nice if they did that double-digit 25% growth. I mean, that's significant right there. That's very nice growth. Maybe that's another reason that Warren Buffett is in this one. Very, very fast dividend growth as well as buying back shares. That is a very nice combination. But I would expect that next dividend raise to be in March of 2025 if they continue that. They do pay out on the January, April, July, October timeframe. I do like that. I need another one that pays out on that time frame. So one in the energy sector might be worth taking a look at. Let's see what the screener says to us. Understand the business. That's where we start. Always get a check there, unless it's just something that we can't understand how they're making their money, what their business is. Growing free cash flow the last 4 years. We had that one jump up and then a jump down. It has grown significantly over the last 4 years, though, with that one jump up and drop down from 2023 to 2024, or I'm sorry, 2022 to 2023. It would not be consistently growing. So I wouldn't argue technically if you want to put a check there. I guess that's fine, but I don't. I like to see consistent growth over 4 years and expected into the future. Growing dividend, though, companies like this are cyclical. I will say that. So if you want to take into account that cyclicality and say you might have one peak year, very nice, and then kind of back to normal growth, that's fine too. What I didn't like is, like I said, if you looked at the 2023 number, it is over the 2021 number. I just don't know how much. You have to take into account the stocks that were repurchased out of the market as well in that 6 billion number. Growing dividend, yes, it is growing over the last couple of years, though keep in mind they did cut that dividend in 2020. Dividend payout ratio very low, around 20%. Dividend yield theory says it's potentially overvalued, but again, that cut really skews this one because you've got 3 years where it had the higher dividend and only the last 2 since the dividend cut. Buy below current cost basis, yes, it's right up against a 52-week low. Return on invested capital, return on equity, this was a mixed bag, so I didn't give them a check there. And earnings per share growth, they didn't have listed, so it only gets 1, 2, 3, 4. Technically, it would not make it on my watch list. Let me know what you think. It is in Warren Buffett's portfolio, and I will say he's smarter than me. I'm sure his screener doesn't look like mine either. I'd love to get my hands on his screener. If anyone has it, go ahead and flip it my way. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So let me know what you think of Occidental Petroleum in the comment section down below. Is it in your portfolio? Is it one you're buying? Is it one that you're looking to buy? Or maybe is it one you're selling? Love to hear from you in the comment section below. If you have a suggestion, go ahead and drop that down there as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.